Housing affordability sucks. Everyone knows about that. Everyone talks about it in Australia. Number one talked about topic. Everyone thinks, because they're all experts, we all think it's because of low interest rates. We all think it's because of high immigration. Historically, we all think it's because of favorable tax treatments. In this video, I'll argue it's none of those, giving data, and I'll tell you why it is, okay, and what we can do about it. And most importantly, how house prices will fare in the next 5 to 10 years based on this theory. If you're interested, keep watching. My name's PK and I help people build passive income wealth through property investing using data, Property Investment Accelerator mentorship program without needing a buyer's agent, $15,000 every single time. If you're new to this channel, interested in data, property, real estate, economy, all these good things, financial happiness, hit the subscribe button and give it a like. That'd be great for me. Let's get into it. So, you've heard the barbecue talks, right? The reason housing affordability is so low, the reason house prices are so high, reason most of us are priced out of the market is because interest rates are really low. It's because there's capital gains tax discounts for those who sell their properties. It's because there's negative gearing, the ability to offset your income based on losses you make in your investment property. It's because of all these hundreds of thousands of immigrants. All right, let's just go through those one by one and I'll prove to you why none of those are the reasons. Okay, number one, interest rates. So Japan, for all our Japanese friends, hi out there, you guys know as well better than me, Japan has had basically zero interest rate, zero official cash rate for the last 25 years. All right, and real estate has been one of the most underperforming assets in Japan. In fact, it's probably the worst investment you could make in Japan. Basically, every other asset type outperforms that. Okay, and on the flip side, all right, Turkey, let's say last year, Turkey has interest rates of 17%. Okay, yet Turkey, their house prices went up 40% last year. Okay, so just because you have low interest rates doesn't mean house prices boom. And just because you have high interest rates or moving up, that doesn't mean house prices crash based on these global benchmarks. Let's go to the second argument. Oh, PK, housing affordability is so low, we're all priced out because of favorable tax treatments. All right, so negative gearing and capital gains discounts. The Labour government came out and said we should abolish negative gearing. That's the reason no one can afford any houses in Australia. Well, let's have a look at that. Negative gearing and capital gains tax discounts are just the same in property as they are in the share market in Australia. It's not something that's specific to property. It's not like property investors have a leg up versus stock investors, share investors. It's the same tax rule. It's a tax rule. It's not a property rule. All right. And is the share market really expensive in Australia? Well, if tax outcomes mean that there's a bubble in the asset class it's associated with, then you would say the Australian share market versus global peers is going in a bubble. And it's not. Versus global indices, the Aussie, based on multiples, PE multiples, other things like that, the Aussie, share market is pretty cheap. It's certainly not the most expensive one in the world. All right, so you can't base it on favorable tax outcomes either. And the last one is immigration. Everyone says, look, immigrants, they're the cause of all our social problems. Let's just have a look at that. So Texas, in the US, it's a state. Texas has about a similar population as Australia, just under 30 million people. And it's had the same population growth as Australia as well. Okay, it's grown at about 1.5% per annum due to immigration into Texas. However, Texas property prices are about half of what Australian house prices are. So just because you have immigration, in other words, population growth due to not just births and deaths, but external factors, that in of itself doesn't constitute a housing bubble or low housing affordability. Okay, so those are just some examples. You can Google this yourself. The data's out there. So what is the reason? I promised you I would share that in the video. What is the reason for our low affordability? Everyone talks about this. What's the real reason? The real reason is the cost to build. I'm looking at my notes here. Allow me that, please. All three levels of government, federal, state, and councils, they tax the hell out of property. Okay, what do I mean by that? When a new property is built or that is coordinated by a property developer, residential property developer, normally on the fringes of a CBD, or sorry, fringes of a city, Melbourne, Sydney, Brisbane, for example, out west, down south, up north, as is the case in Melbourne. That is where new properties are built. Now, all three levels of government, they apply 110 different types of taxes. There's Section 96 levies, there's stamp duty, there's GST, there is infrastructure levies, etc., etc., etc. In fact, almost 40 or 45% of the cost to build in Australia is just tax. Okay, is just tax. So what do developers do? Those who are building these new houses on the fringes of the cities. What do? They just bake that cost, that additional 40, 45%, into the end sale value. So it's the consumer, the buyer, who has to pay for it. All right. And most of these new builds happen in fringe areas of cities. Okay. And the case is, or the simple fact is, that developers don't build until it's economically feasible to build. So let's say it takes them $700,000, $800,000 to build one of these houses. Unless there's demand that can afford to pay $700,000, $800,000, they simply don't build. And what that creates is scarcity. Okay, that's what creates scarcity. If they could build all the way between, Melbourne and Ballarat, all the way between Toowoomba and Brisbane, all the way between Sydney and Newcastle, then there wouldn't be this housing affordability crisis. But the fact is, the taxes are too high, therefore it's cost prohibitive, doesn't make economic sense for them to build. The demand isn't there. Therefore, supply is constrained, and prices are based on your marginal production. Okay, so the cheapest houses are on the fringes of the CBD, and if they are piled up, the prices are so high because of taxes, then all suburbs going in towards the CBD, they're just a reflection of that price. They're just using that price as a point of reference. So if the furthest out suburb is 700K, then the one in will be 750, the next one in will be 800, and then you get all the way to the lower North Shore in Sydney, you're paying $5 to $10 to $20 million. Okay, but if they just made these fringe suburbs cheaper, all the others going in towards the CBD would also become cheaper. It's just relative. So American commentators like Harry Dent, I'm sure you love that guy, they come out and say Australian housing is in a bubble. It's going to fall by 40%. It's going to crash. The analogy to sometimes use is that of a cigarette. You go to Texas, you can buy a pack of cigarettes, not that I smoke, for about $4.50. You try to buy a pack of cigarettes in Sydney, it costs almost $30. The cost of production is the same. The difference is tax. Australian government, one thing they do well is they tax cigarettes, through the roof. They want to discourage the use and production of cigarettes. That's the difference in price. Now, you can't say cigarettes are a bubble. It's just that they're taxed heavily. And so therefore, there's not that much supply, etc., etc. That's exactly what's happening in the housing market. The tax is so high for new builds, up to 40, 50%, that scarcity of supply is created, and therefore the demand continues to rise. There's not enough supply, and therefore housing affordability becomes worse and worse and worse. Okay, so what's going to happen then in the next 5 years, the next 10 years, the next 15 years? The only way to solve this problem is to increase supply. But what incentive do either of those three layers of government have to actually reduce their revenue? If they're going to increase supply, that means they need to reduce tax. But that means that they need to reduce their revenue. Okay? So they could remove taxes and they could reduce the marginal cost to produce these fringe suburbs, these fringe houses, but that would be shooting themselves in the foot. And so no one's going to do that. Therefore, house prices are going to remain expensive. All right? The cost to build, furthermore, is just getting higher and higher and higher because of supply chain bottlenecks, because timber pricing, steel pricing, these things, commodity prices were already going up pre-COVID, but pre-Ukraine-Russia war. Okay? So the very thing that is the panacea to housing affordability in Australia, the only thing that can resolve housing affordability is getting worse and worse and worse. All right. So what do you think? Is it a good time to buy houses? If you have a long-term view, then yes, it's a huge social problem. The government should really do something about it, but they have no incentive to do so. All right, none whatsoever. Tell me your thoughts. What do you think? What do you think can be done about it? Okay, leave them in the comments below. The moral of the story, housing affordability is very poor. It's just going to get poorer and poorer and poorer and poorer. It's a big social problem. Don't blame me, I'm just the messenger. Take of this what you will. For those of you who are property investors thinking a crash is coming, hopefully that brought you value. My name's PK, Level Up Your Knowledge. My podcast below, 13,000 member Facebook group below as well. Also a link to the Property Investment Accelerator. Don't want to come across as a spruiker, but these are just facts. Catch you later, guys. Bye.